Tomorrow marks 10 years since the lowest point in the Great Recession. That's when the stock market bottomed out, with millions of people having lost billions of dollars in their 401ks and their IRAs. Certified financial planner Jirayr Kembikian from Citrine Capital is here now to talk about exactly what happened 10 years ago today and looking ahead to what people should be doing with their money. First off, we don't want to dwell too much on what happened a decade ago, but certainly it was a challenging time. How much did all of us suffer financially during the Great Recession?
So March of 2009 marked the lowest point during the Great Recession for the S&P and the Dow Jones indexes. And between September 2007 and March of 2009, approximately $3.4 trillion in retirement assets were lost.
So obviously that means the folks at that time who were closest to retirement were hit the hardest.
Absolutely. When market volatility hits like that, it's going to hit the people who are older folks who are closer to retirement, and they should be more conservative in that sense.
All right, so how do you describe the rebound that we have seen ever since that point in the market?
So for folks who have been contributing to their retirement accounts between 2007 and 2017, they've seen their account averages triple throughout that time period. And in contrast, folks who have been sitting on the sidelines have seen a much longer road to recovery.
What do you think, as you look back a decade later at the Great Recession, what are the lessons that you think all of us learned? Professional investors, average investors, everyone.
Right, so these are common talking points with our clients, and we have a couple things that we discuss with them. Number one, of course, is to reduce risk as much as possible. And how you do that is through diversification. Diversification not only gives you access to additional asset classes, it helps add a layer of protection in your portfolios.
All right, and also we can see here that the other thing, as we sort of alluded to here, is to sort of think about where you are in life.
Right, so consider your age and your time horizon. That's very important. So we're often talking to our younger clients, for example, about how they could be more growth-oriented because they could afford some volatility in their portfolio. Whereas older folks who are closer to retirement should be more conservative and should be utilizing a more comprehensive retirement plan. And
you also say to have a long-term approach. What do you mean by that?
Absolutely. So headlines often drive fear and emotions with individuals, and those sometimes can lead to rash or emotional investment behavior. What we focus on is the long term, to develop a strategy that is in line with your goals and risk tolerance and behave accordingly.
All right, obviously we have seen, the market soaring. I mean, really, in the 10 years since the Great Recession and since the market bottomed out. But still, as of late, we have seen quite a bit of volatility, and obviously that gets a lot of folks on edge. How do you suggest that folks navigate that or sort of process what we're seeing with some of the volatility recently?
This is a concern that we're seeing from our clients, and what we do recommend is focus on the things you can control. One being retirement savings, for example. If you're able to contribute more to retirement, that's, of course, going to be more beneficial for your future. We have a retirement calculator on our website, citrinecapitaladvisors.com, and that will allow you to show how much you do need for retirement. There's a pretty daunting statistic out there that about 1/3 of Americans over 55 and over don't have any retirement assets.
Yeah, that's certainly not good. Do you see things continuing to move in an upward direction? What's your sense looking to the future?
Our long-term outlook at Citrine Capital is always positive. However, we're still preparing our clients for some type of volatility in the short term.
You have to be ready. All right, Jirayr Kembikian with Citrine Capital. Really appreciate you coming in. Thanks so much.
Thank you. It was a pleasure.